Hi, everyone. Welcome to the 108th episode of the Timing Research Show for October 17th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 160th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt Buckley back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Appreciate it, folks. Welcome aboard. As David said, my name is Matthew Buckley. My call sign is Whiz, and I am from Top Gun Options, and I'll get into that in a couple of seconds. I have a really good group assembled today. Vince Vora of TradingWinds.com, Fausto Pugliese of CyberTradingUniversity.com. Fausto, always googling that up. Geoff Bysshe from Market Gauge, and Larry's back. Larry Gaines from PowerCycleTrading.com. So, guys, why don't we keep that order all day today? That'll be our flight schedule. Vince, Fausto, Geoff, Larry, and I'll bat cleanup so I can tell everybody they're either right or wrong, which is the best part about hosting. But Vince, starting with Vince. Why don't you give us a quick executive summary of your trading background and how you got to where you are today and what you do at Trading Winds?
Sure. Well, thanks, Matt. Thanks for having me back on. I'm really glad to be part of this. I'm Vince Vora. I'm the head trader at Trading Winds, and I have actually been trading for 30 years. Believe it or not, it's been a whirlwind, but it's been extremely fun. Everything I do has to do with technical analysis. I actually started out with fundamental analysis many years ago, and there's some very specific reasons why I quickly switched to technical analysis and have never looked back. All my systems are based on that, and really all of the systems that we share with our member base are based on trend and momentum. That's what I live and die on with the markets, but it's been an extremely fun ride, and nowadays, after all those years of trading, I still, of course, trade for myself, but now my focus is on helping our members become better traders. And we do that through various ways, but one of my favorite is through our live market chats that we have every week with our traders. We meet twice a week. They come into our room and ask me any trading related questions they like, but it's a fantastic group, a lot of experience, and it's a lot of fun. It's a lot of fun. And again, thanks for having me back on.
You bet, Vince. Thanks for being here. Fausto, why don't you let everybody know your extensive background and what you do at CTU?
Hey, Matt. Thanks for having me, everybody. And looks like everyone's here. Yep, absolutely. My name is Fausto Pugliese, president founder of CyberTrading University. I've been doing this over probably almost close to 25 years now. And just like Vince mentioned earlier, became a very successful day trader here in New York. And over the years, just been seeing so many people just been doing it the wrong way. Finally learned myself how to do it the right way by learning for some of the best traders in the industry, and just kind of more or less want to share the knowledge a little bit, everyone, that we should all learn how to trade. And if not, you're going to do it eventually. But the only way to really learn from people is you can't be self-taught. You got to learn from the best people in the industry, and you can't just learn from one person. I learn from multiple people, and that's why David had being here and doing this event with Timing Research has always been a great event because we really enjoy talking to you guys, educating everyone, and just hopefully everyone makes the right choice, and that is taking matters in your own hands and doing it the right way.
Agreed, man. Well said. Well put, as usual. And we'll hear more about what Fausto's looking at the market here in a little bit. Geoff, how about tell us your background and how's everybody doing at Market Gauge and what you're doing at Market Gauge nowadays? And you might be on mute, Geoff.
Hey, yeah, you're on mute now, Geoff. Looks like your mic's not working for some reason.
All right, we'll get back to Geoff in a couple of seconds. I'm sure he's troubleshooting there. So, Larry, why don't we head to you?
Okay, well, thanks, Matt. And yeah, it's great to be here again today. Yeah, I started my trading career over 30 years ago as well, trading foreign crude. So started out in the oil markets and still, pretty much up to speed on oil. But my company, PowerCycle Trading, we're focused on using trends and momentum and try to use options as much as possible for all the trade setups, but also like to focus on seasonality type trades involving oil or some of the other commodities. So I like to look at pretty much a broad brush of, the commodities, and then also stocks and ETFs for option trades using momentum and trends.
Well, we're definitely going to be, or at least I'm going to be picking your head here in a little bit, Larry, on the XLE and what's going on with the OPEC clown car. 1 week we have a deal, and then 2 days later there's no deal, and then wait, we might with the Russians and the Saudis, and so I'm definitely going to ask you about that, because a lot of the folks here at TG, I love trading XLE and some of these oil products just based on the absolute clown car with what's going on in the oil industry. So yeah, we're definitely going to pick your brain there. Geoff, did you make it back up? Did you fix your mic by any chance yet? He might be rebooting his computer or something like that. All right, we'll just go ahead and press forward. All right, guys, I know David sent you a copy of the report yesterday. I'm sure you've had time to look through it. So let's just go through top to bottom, starting with Vince. Question number one, what direction do you think the S&P index will move from this coming Monday, where we opened this morning, all the way up to Friday's close?
Thanks, man. I think we're actually going to remain flat to slightly lower. I think a very, very key level to keep an eye on is the September 12th low, right around 2110. I think if we break below that, we can go much lower. But actually, I just think it's a slow grind towards that level by the end of the week. I think there's a lot of uncertainty around the whole election process that we have coming up. And, when I look at the longer term charts, things still look pretty decent to me. And we're actually sitting on a decent level of support right now. But I think for this week, I think we remain flat to slightly lower. I think we slowly make our way towards 2110.
Got it. That's you might hear a similar answer out of me. So well said. Fausto, I know you're very short term, but what are you thinking about by Friday? What's the market looking like?
Well, listen, I'm here all the time with you guys, and I think I go back all the way probably till June or May, wherever it was. I think July, actually. I told you the market's really not going anywhere. It's, in my opinion, you could see it's starting to break lower lows. We've been testing this major support levels at 18,000 on the Dow. I really, with this whole election going on, even on the S&P, you're talking major support levels at 2120. If it breaks this thing, we're going to probably go all the way down to the 2120. We're at probably another 100 points on the S&P if it doesn't hold here. Listen, everyone's really nervous about what's going on with this election. I can't even stress it any more than what it is. This is probably one of the most important elections in our lifetime, and it's just like I'm actually doing two big events today. One here on site at a big speaking arrangement here on Long Island, about talking about what happens if we have a Trump or a Hillary presidency, and not to get too political. I know a lot of the traders here could agree with me, because you never talk about politics, you never talk about religion, but we all talk about trading, and there's going to be opportunities. So you just gotta just play it as a Brexit, just be in cash and just be prepared. But as the trend goes right now, not getting way off. I know we got a lot to talk about regarding about some of the things that are on today's topics. It's not looking too good. If it breaks this support level, specifically on the Dow of 18,000, you could be dropping 600 points in a blink of an eye. So, and I think there's a lot of scare money that's going on out there, and especially what's going on with this election. So, that's my thoughts on it. So as long as you're in cash, cash is king.
At least for now. They can always take your stock and options away, and we thought cash would always have some value, but sometimes the full faith and credit of the United States government isn't worth the paper that it's printed on, or at least it might be heading that way. Geoff, are you back up yet, man? Okay, he's probably got a full blue screen of death staring at him. Larry, how about you? Are we higher or lower by the end of the week?
Yeah, I have to go with everybody here, so that's probably scary, huh? Everybody going the same direction. But yeah, just based on my technical indicators right now, just the momentum is to the downside on the major indexes, the NASDAQ, the Russell, the S&P, the Dow. So if you just look at this chart, just kind of summarize everything using, these are momentum indicators below, but if you look at just the Fibonacci levels, and if we just take the September low that was discussed and you just run the low to high, you can see just all, 4 of the indexes are breaking below some pretty key support as far as moving averages and then also Fibonacci levels. So we're down, on these lows. So this week seasonally is also a week of the month of October. And then the tendency, though, is for the markets to kind of start pushing back more so to the upside. But this week, potentially back down here, lower, drifting lower down to that 21, 20 level right in here. So kind of go with, the other members here today. And plus the VIX is still elevated. So if that stays above 16, we get another spike up. We could see another push down.
Yeah, I rarely do we all have agreement here, but I think we're all pretty damn close. There's no reason for this market to be. Can somebody go mute? Sounds like you have an air raid siren in the background. Sounds like the Germans are coming to London. I'm going to say, and I think, well, that's one of the crappy things about leading this I get is Vince stole my fire. I think Vince is right. I think we're unched to slightly lower. There's nothing to get us off the mat. I'll give you my reasons about why I'm saying unched to slightly lower. So I'll say that MO here. So I agree with just about everything everybody said here about where we're heading this week. Geoff, I see it popped up there, man. Can we hear you?
I don't know. Can you hear me? Because I can hear you guys.
We got you loud and clear, my friend. So
all right. So sorry about that. Even with the sound checks beforehand, I don't know what happened, but so I've kind of caught a little bit as I've logged off, logged back on, and just to kind of jump right in, I think that I'm kind of split between what you guys were saying. I would agree that if my big index right here is the SPY, the S&Ps, and the fact that we broke this key level of 212 last week and then haven't really followed through, I think gives me a ray of hope that we may have set up for a head fake to the upside. I think it's really easy to play though. If we start heading higher, I turn bullish. If we continue to break lower, it wasn't a head fake. And I agree with Fausto. This thing could be like a rock in water.
Yeah, that sounds about right. It really is. If once a head fake is either confirmed or denied, get on that train in wherever it's going. It seems to be working. Geoff, real quick, since you didn't get a chance at the opening, tell us a little bit about your background and what you do over there at Market Gauge.
All right, so I actually started as a floor trader with my partner here at Market Gauge back in 1990. We were trading commodities, but when commodities dried up in the middle of the 90s, we moved to stocks, and we're fortunate enough to get into a quant-driven hedge fund. And as a result, our background, which has always been rules-based and technical, we now do a lot with trading from a technical point of view as much as completely automated algorithmic models. So that's our focus. We look to help people either understand and trade with the models or be more of a discretionary trader, but at the same time, really rules-based. And we focus on stocks and ETFs.
Awesome. Okay, man. Perfect. Well, welcome aboard. All right, Vince, based on you saying, hey, I'm using my own words, but you said flat. I said unch to down. You said flat to down. Same in my book. Mm-hmm. What's your level of confidence? What's your delta? What do you feel?
I'm comfortable with a delta of 80 on this one. I'm really pretty confident about that outlook. I mean, just looking at that chart of the S&P 500 on a daily time frame, we've been flat and going sideways since the end of June. Really. I mean, there's been some back and forth there. There was that dip in what was it here in early September, but really we've gone nowhere and have had plenty of opportunity to do so. And even this late last week and this morning, with some of the financials coming out with earnings, some of the banks, beating on all metrics, and yet we really haven't seen any bounce. I think One thing the other traders here will agree with me on is that there's one thing that the market does not like, and that's uncertainty. And I think as we head into this election, no one really knows what the fallout will be. And until we clear that out of the way, I really don't think we're going to move much either way. But certainly, I'm sticking to that forecast, and that 2110 level is absolutely key that we remain above that.
Yeah, it's almost like I was telling my traders last week, if you look at the 50-day and the 200-day moving average, it's almost like trench warfare, in World War I. Here the Germans and here the Allies. Nobody wants to be in the middle of this no man's land in between the 50 and 200-day. So the market's a magnet. We're either heading down to the 200-day with some serious airspeed, and the election might be the event per what you just said, or we're heading up. And I don't even know what that catalyst might be, but I guess we'll talk about the election here in a little bit and what the conventional wisdom is and what Wall Street wants to see versus mom and pop. So, okay, got that point. 8 delta out of Vince. All right, Fausto.
I'm sorry. Go ahead.
We were talking about what your level of confidence is, easy for me to say, on where you think the market is heading this week, up, down, or sideways.
Oh, I'm sorry. I thought I mentioned that earlier. Listen, my level of confidence is that, stock market's not going out of business. So there's no worry about there. You just got to basically just sit in cash and listen, I mentioned earlier about Brexit. I told my traders, regarding about going into this, going to this election, it's like a Brexit. If you sell everything, okay, and it passes, nothing's going to happen other than it's just going to cost you a ticket charge. If it doesn't pass, the market's going to correct. And if you really like the company, you can just buy it cheaper. So, going into, you're looking how the trend is working on right now. Listen, I was talking to some of my friends here on Wall Street. They're telling me, listen, these companies might basically just, cook their books just to look good going into the end of this year, and to make the election look better for one person versus the other. But on the other hand, I mean, you can't, if, like I told you, I'm doing a speaking earlier. I don't know if you guys realize this, but interest rates have been down at these lows since 2008. How there's only one, you can't go any lower, if you look at what interest rates were, back in 2000, in 2000 and 2007, at least we had something. So, and between the deficit and this and that, I mean, a lot of these companies are going to have some, eventually going to have to start paying some interest and start paying some money if they're going to start raising it. So, to me, these numbers, I don't trust. I really don't trust anything. So I'm still bearish. I think ever since I told you, I've been bearish ever since I've been here. And it's just, I just think the fat lady hasn't sang yet.
Yeah, it sucks because we really do. We have to trade the market we have, not the market we want. I think most of us, we're all pretty educated guys.
Right.
Is not that we want a down market or people to get hurt or 401k becomes a 201k, but I agree, man. I do consulting on the side. I give speeches. And I've spoken around the world, but obviously here in the United States, I work with CFOs, CEOs, frontline salespeople, and things suck out there. To your point, Fausto, the Wall Street-ism couldn't be more appropriate today. The one that says, hey, if you can't hit the ball over the net, lower the net. And that's what, we're seeing. This is the 6th straight quarter of just crappy profit growth in the S&P 500 companies. And I've literally been in boardrooms where it's like, well, if things are really going to suck this quarter, run out there now, tell them we're like going out of business, or,
that's going to be cooking the books I was talking about.
Exactly. Tell them it's going to be horrific. And then when we come out with our earnings and it's less horrific, our stock's going to go up. So I don't know how long we can play this charade, like you're alluding to, but that fat lady is at least warming up and getting her vocal cords ready somewhere in the wings.
And you know what? And like, you know what? And everyone has to look at it. It's healthy. It's actually healthy. You can't look at it. It's not a bad thing. It's a good thing. It's going to, listen, when everyone was crying about what happened in 2008 and with the whole, housing crisis, listen, Manhattan, you can't took off. I mean, you could have, the thing that you always wanted to buy, you could have, now you can't touch anything. You know, it's the same thing. There's companies out there. They're like, oh, I wish I could just buy Facebook. You know, now I wish I had it when it was at at $40. You know, it's at $127. I never thought it. You know, and it now comes down to 70, and people are like, oh, now I can finally buy it, or Amazon, whatever it is. So, you know, it's healthy. You know, bring all the people in there, but don't you know, like you said, I don't want people to think we're being negative. It's just reality. It's just, you know, traders, we look at volatility, and that's what we need. So we're just going to trade what the market is. So good or bad or any different, just, you know, do what you got to do. What's out there. Just, but don't be ignorant and think, you know, and think as an investor, because I think that ship doesn't, you know, we're not all, I think that ship has gone and sailed. We got to think more as tradings, and that's why we do what we do.
Yeah. Well, you're right, man. In 2008, the world ended. Our father and mother stock market ended in 2008 when you got the Bank of Japan and you know the ECB doing negative interest you know rates. Man, it's just we literally are in bizarro market. So fortunately, you know, all the traders on this board, we know we can make money no matter if the market's going up, down, or sideways, which is a good thing. But we still. You know, I like to tell people at Top Gun Options, I wear two suits. I wear a flight suit that, you know, I was in the Navy for 15 years, and I wear a $20,000 Armani, whatever, Gordon Gekko suit. Wearing my flight suit, I feel like shit as an American in certain ways about stuff. But then I'll put my Gordon Gekko suit on and go, I don't care. I'm gonna make money off the stupidity of others. But, you know, I'll be happy in that respect. But at the end of the day, I think we all shake our heads a little bit and go, all right, it's a hold your nose type of market nowadays. So I agree, Fausto. Geoff, how about you, my friend? What's your delta on where you think the market's heading this week and some of the reasons?
I think when you look at this market, and this kind of gets to what you guys are saying, I think when you look at this market, I could flip a coin 50-50 with what direction it goes until it breaks the inflection point. And so many of the markets right now are sitting at critical inflection points. But even if you just focus on the equities and the bonds, if you measure them in terms of the TLTs, that if these things move 2-3% in either direction, I think the momentum could get going in that direction. Not necessarily for a fundamental reason. Of course, it'll be easily backed up by some fundamental reason, especially if we start going down. With earnings season, all we need to see is a few bad earnings reports over this week, and that could get the ball rolling to the downside. And then the fundamental reason will be exactly what we've just been discussing here, that companies are hurting. However, if the market starts to turn up because we get some kind of good news, then everybody's going to potentially jump on board because they're going to be afraid of missing the rally. And the fundamental argument will be that you know, we're turning the corner, and the last 6 quarters of crappy earnings is as bad as it's going to get. So I think you just got to follow whichever way the market goes, because it's purely an emotionally driven market right now, especially with the unknown of the election coming up. So to answer your question directly, flip a coin. I don't have a lot of confidence in any 1 week move until we pick up some momentum here.
Yeah, and in this type of market, Geoff, I think that coin might actually land on its side. that would be our luck. That's the way we're trading today. Larry, over to you, my friend.
Yeah, thanks, Matt. Yeah, I just think 80% probability sideways to down this week, just based on the technicals. The momentum is, you know, to the downside. We've got earnings starting. Banks have been good. We've got some of the other big guys next week. So we'll have Apple and Amazon and the really big guys next week. So I think we drift down lower here, and then potentially next week, actually, you know, seasonally tends to be a week when you can get the market to start shifting back towards the upside. So this week could be a dead week. You know, we have monthly option expiration. I think we just kind of drift down. And again, you can see that 21.15 that's been discussed. If you break that, which I tend to think that we'll probably wait closer to election and then see what happens. But through that, you've got a pretty good drop to the downside. But this week, looking for a drift lower.
Okay. Looks like Matt had some technical issues. Fausto, you want to go ahead?
Yeah, we lost Matt.
I am back. I pressed the wrong, tried to unmute, and I went to my Citi credit cards payment page, which reminds me I have to pay my credit card. Okay. Thanks, Larry. Summed that up nicely. I'm obviously in agreement with all you guys here, so I'm not going to take up too much airtime of that. We'll get into the reasons why here. That'll be kind of the next question where we're going to really delve into the meat. You guys can show charts or do whatever you want to do. But I'm, I kind of agree with Geoff where it's one of those, I mean, we have all these Fed lieutenants. Who was it? Dudley the other day, Fisher today, all these Fed lieutenants running around doing the, who's on first routine, which can even send the market. Leading into that last Fed meeting, I forget which clown it was that, that Friday said, hey, we're going higher. Market went down 300 points. And then 3 of them on Monday tried to play. That's not what he meant to say. So even these Fed lieutenants talking today can move us around. So I think we're unched to lower, and I'll stick with about a 0.8 delta as well. But I'm going to steal a little bit of what Geoff said. If we get a kind of confirmed move past a head fake in either direction, all bets are off. I don't care what I said. I'm going to jump on that train and maybe even do some double verticals, which I'll share one of my trades here in a little bit that we have on VXX. So I really don't care what's going on. If there's any sort of volatility in the market like Fausto's talking about, which we know there's going to be. I don't care what poll says, Hillary's up 72 points, don't even go out and vote, which is about every poll, which is interesting. There's still going to be some volatility that's going to happen. We're going to see that balloon fill up going into the election. And as soon as just before we hear the results, I'm going to get out of it and I'm going to do a bearish double vertical on VXX. So I'm in agreement with all you guys. All right, Vince. So I know we've all chopped around all of our thoughts, but specifically or tactically this week, what would you say are some of those things that are influencing your decision for that flat to lower?
Well, first of all, I think many of you have touched on several key points here. You mentioned one earlier where you said, we could move higher, but I don't know what that catalyst would be. And that's exactly it. I don't know what could possibly take us higher. We've been in this range for a long time, had many opportunities to go higher, made many attempts to go higher and could not overcome that hurdle. I really don't see a lot of positives out there. And when I look at the technicals, which is really what drives my trading, not only, if you look at just about every moving average out there, it's flat at best on the daily time frame. Most are starting to head lower. If we look at something like the Ichimoku cloud, which I'm using more and more often these days, we're right at the bottom edge of that cloud and just about to break through. And also, we're putting in lower lows, lower highs this past week. There's a whole gamut of reasons why I don't see this going higher. And that's the main point here. I've been very bearish for a long time, like Fausto. I was calling for a big time drop this year from late last year, and it hasn't happened yet. I've been proven wrong right now, but as I've been telling my members, when it does happen, I think it's going to be epic. I think it's going to be something that most retail traders have not seen in their lifetime. And not that I'm calling for that right now. I'm not. As I mentioned this week, I think we go flat to slightly lower towards that 2110. Once that election is behind us, all bets are off. I think it's pretty much a given that we will see higher rates or a rate hike, whether it's November or December this year. I think that's going to happen. And I just don't see any real positives out there. As you mentioned earlier, you talk to business owners out there and it's a tough grind. You speak to individuals and it's a tough grind. I just don't see where the positives are. So I think we continue to trend flat to slightly lower this week, but I think that that sizable drop is right around the corner.
Very well said, man. I'm going to copy and paste most of that into mine. So well done, Fausto. I know you've done the same thing I have. You've jumbled through all of it, but specifically, what's on your tactical radar this week that you're keeping an eye on?
Well, I mean, we're going into we got a couple of earnings that did come out this year that coming out this week, so I'll keep a close eye on some of them. But I mean, I'm more or less just focused on what's happening with this Dow right here, because in the past couple of days, it's really been breaking lower lows. We had just a couple of days ago, we did test a 17,959. I mean, and it came back, and we bounced about 200 points, but it never came back to the 18.4. It's getting me really, we had some real major support levels right around the 17,990, right around that. And you could see the market's been trending down this last couple of days, and I'm just really, it's Monday, okay? Monday, nobody really comes out with news. There's really not a lot of news that comes over the weekend, but when you get close to, if we keep trending like this for the next day or two, I would be really petrified what's going to happen on Friday, because usually nobody likes holding over the weekend, and we're really getting close. We're about less than 100 points away from those lows. So let's see what happens there. There's a lot of program trading that kicks in. I don't know if the listeners know what that is, but there's a lot of program trading of volume that is owned. People own it at these prices, at these levels. So if you start, once you break through, one thing I teach, Matt, and everyone probably knows this too. The way I was trained is that, the way you read a chart is like looking in a building. You have a floor and you have a ceiling, and the difference between a floor and a ceiling is really not that thick, and the longer you pour that concrete on that floor, the harder it is to break it. But once you break through that floor, then you're going to break down to the next floor. So if it does break it, I'm actually going to be happy, because I'll go short. But just everyone has to remember that. Don't look at it that it seems like we're all on the same page of what we're looking at. We're not the mainstream media that are going to just make it say what's status quo, what's right for everyone else. But I think we're all on the same page. It's just I think everyone just has to understand is have a game plan. You're probably not hearing what you want to hear, but you just got to hope for the best, hope for the best and prepare for the worst.
Very well said. Excellent. Okay, let's go with Geoff.
All right, so I'm going to play a little devil's advocate here, and a little bit with Vince. It's hard to disagree with you guys, and it's because I think it's really easy to be bearish right here. But the reason, if there's a ray of hope for being bullish, and one of your questions was, what would I be looking at right now? And I'm going to try and share my screen. I don't know if that's working. If it is, you're going to see semiconductors, the ETF.
We got it.
So if semiconductors are still in a strong trend, this has been the leader really since Brexit. And so if there was a place to look to see if the leaders have finally fallen apart, and plenty others have, it would be semiconductors. So I would keep your eye on semiconductors, and a break below this 50 is just like a break below that S&P. So one of the ways to judge whether or not the S&P is a head fake, for the S&P to maybe it's today, maybe it's tomorrow, break down through the lows of last week, not really follow through, and have these semiconductors hold up. So why would we go higher? I know this doesn't sound like a good reason, but we're traders. The reason we would go higher is because there's money that is sitting on the sidelines worried about how they're going to finish the year. And if the market collapses, that's not going to be good for them. But if the market goes up and they're not in it, that's going to be even worse for them. So I think the real test for this market is, whether or not the guys who want to buy the dip, hoping that they're going to get a run up into the end of the year because that's what's going to pay their bonus, have more money than the guys who are just bailing. And that's why I think it's possible, with everything looking so terrible out there, for this thing to turn around and head higher. The only reason it would head higher is because it's as low as it's been for months, and too many people missed the whole Brexit thing. So semiconductors is what, coming back to this, I think is where a lot of the trend following money went just by looking at the chart. And so if that breaks down, then, you know, I can't really be, I can't make much of a bullish argument. Now, to argue with myself, it would take, you know, one of the
You're
things.
You're a devil's advocate and you're bipolar. That's awesome.
So, yeah, so here's what's scary. And the indicators that you should see here now are simply focus on the bottom lines here, the red and the green histogram. Those are the absolute highs and absolute number of new highs, new lows. So when this line, the ratio here, turns negative below, not negative, turns down around 70, and you're at a new high, that is not good. Definitely not good. So if this continues lower, the momentum clearly is down, but we've got quite a bit of downside momentum existing here, which leaves the opportunity again for people feeling like it's sold off a little bit. This is my opportunity. I got to get back in this thing. So keep an eye on the semiconductors. If they can hold up, that's your ray of hope.
Interesting. I'm not a huge semiconductor guy, but I wrote that down. I'm going to put that in my my bag of tricks or things to look at, Geoff. I appreciate that. And Larry.
Yeah, so just looking at the markets and reasons for it to go down or up. One thing to also consider, just, you know, follow crude oil. Now we've got the OPEC. They're going to be, I guess, they have to come to some type of agreement on, you know, how to split up this potential freeze, allocate production stuff. But, you know, they're just basically manipulating sentiment of the market for oil. They never actually do anything as far as, you know, fall through with what they want to do. The only way that could happen is if Saudi actually will cut their production. So, you know, we won't know anything. I think it's till they meet again on November 21st. So that's going to be, you know, hanging over the market. But in the meantime, seasonality does kick in with crude, and you'll see refiners cut back. You'll see less demand for crude, and crude tends to drift and go lower into December. There's also tax considerations. A lot of inventories, state by state, they tax oil companies based on their inventory, so they don't want to restock inventory. So you tend to see a big push down while they get rid of the inventory they currently have going into the end of the year. Then you see oil turn back up at the first of the year, you know, February, March. So I think seasonality will kick in with oil, which we're through the hurricane season. So you tend to see that the second half of October, and it tends to trend lower going into December, and you might get a little pop up. So that if that tends to, you start seeing inventory builds this Wednesday. We saw an inventory build last week. You start seeing continued inventory builds, refinery runs cutting back. I think that'll also influence price action, and that could be something to tip the markets lower as well. So we'll see.
That's great, man. That's a very good brief on oil there. It cracks me up, man. Because I got caught in an XLE trade, the Algiers meeting. I'm like, there's not going to be any agreement. Headlines, OPEC agreement. I'm like, even if there's an agreement, there isn't an agreement. And then 2 days later, you know, three kids that, or three people you want to watch your kids, Libya, Iran, and Nigeria all increased their production to 700,000 barrels a day or whatever it was, and then the XLE rolled over and started dying as it's been doing lately. So I put a repair trade on and got back most of what I got kicked in the gut on the other trade. But it cracks me up. Even the journal headlines are, you know, hopes and skepticism. Whenever you see a headline that says, you know, oil up on hopes, I mean, hope ain't a strategy, man. I mean, if we're having price movement on all these type of, you know, gray, it's just, I obviously I spent a lot of time in the Middle East, lived in Saudi Arabia or stationed in Saudi Arabia for 3 months. I just get the culture, and these guys just sit around this big, what is it, you know, like football sized table with flowers in the middle, and they all kind of, yay, production cut. They all give each other the thumbs up, and then as soon as they land back in their country, they turn around and give them the middle finger and say, we ain't, you know, I can't hear you talking about the production cut over us opening our spigots even more. So I think you're right, man. If we get a December, January, February-ish oil type of event, those are the two things that I personally believe, and I tell my traders are going to bring this market down. That, to Fausto's point of view of the fat lady singing, the two things that can bring this down, it's not going to be earnings. We all just agreed that this is the sixth quarter of, are you kidding me? Earnings. It's not going to be a world event. I mean, God, we got Putin shoots down an airliner full of civilians, everybody shrugs and nobody cares. So it's not like it's going to be some sort of, macro event. China's more or less taken over the South China Seas and built their own little countries. It's not going to be anything that in the old days in our father's market would scare us the hell out. It's going to be oil, to your point. We get another one of those, oh my God, oil breaks $30 type of headline. The S&P's breaking in half. The second one, in my opinion, is the lack of confidence in central banks. Once we really do pull back the curtain and see that the wonderful wizard back there ain't that wonderful, and the hopium that we've been smoking since 2008 isn't working, it's over with. So I appreciate that insight in oil, Larry. I actually took a lot away from that as well. For me, I'm not going to repeat anything you guys just said. Let me share my screen real quick. This used to be, actually, let me get your take on this, guys. This used to be important in the old days, and it might be again if it's a dead week of nothing going on. This used to be a big deal. Tuesday night, China comes out with their GDP, industrial production, fixed asset. How many times have we used to wake up the next morning and go, why the hell the future's down 150 points? Oh, China came out and said X, Y, and Z, or the GDP did this or that or anything. So I would keep an eye on this in this kind of market environment where it hasn't rained in 5 years and we're running around the forest with bottle rockets. One of these might be just the out of the blue catalyst that sends the market down for the week. A big announcement out of China that there's a slowdown. I don't expect that to happen. A lot of people say, hey, Whiz, you trade, I like trading the FXI. And they're like, you believe what comes out of the Chinese government? And I look at them, I'm like, what are you, stupid? I don't even believe what comes out of our government, let alone the Chinese government. So everything else for the week is normal macro stuff that I'm going to keep an eye on. But Bank of Japan, Governor Kuroda is speaking, and there's also an ECB meeting as well. So these overseas events, I'm almost done looking at tactical events. I mean, guys, look at what happened today. The Empire Fed, they were looking for a 1.1 print, a positive after a -2. -6, 8. Yeah, who cares? Cap rate 75.4, industrial production a 0.1. There's nothing good that came out today. So it's almost like we don't even care anymore about the macroeconomic data. We just kind of care about the Fed, and that's all about it. So I'm going to be keeping an eye, actually, not only tactically here in the States, like you guys said, in a bunch of those areas, especially oil, Larry, but I'm also going to keep an eye on China, Japan, and the ECB. So any thoughts on that, guys? And you guys watch the foreign stuff at all? You can jump in however you want.
The other thing that we haven't really touched on, and that's a big thing that's really been changing a bit over the last week, is the U.S. dollar. So it's been breaking higher. There's so many of these huge sovereign wealth funds and just global relationships that are tied to the U.S. dollar. And with the U.S. dollar starting to break higher, if it continues on that path, that kind of relationship can shift all kinds of asset classes and have to do, different unwinding of trades. So if this dollar starts breaking, back above that 98 and heading towards 100, then, watch out. And that's going to put major headwinds on all global commodities, price in dollars, all, global macro funds that are, foreign type based funds, EEM, those kind of things. So if that continues to the upside, money flowing in dollar, pushing dollar higher, that's going to put the headwind on commodities. So that would potentially pressure oil down more, materials down more, et cetera. So that's the other thing to really watch closely, is that dollar.
Great point, Geoff. I didn't even mention any of that stuff. Fausto or any other guys have anything to summarize on this week as well before we move forward?
Yeah, Vince, I think that is a great point, and that's one of the other markets that are really at a critical inflection point, and it lines right up. Trying to see if I can get it to show up on my charts here. It lines right up with the TLTs. Yeah, so I don't know if you can see my screen, but the lower left-hand screen here is the UUP, the dollar, and it's breaking out as you just described. And then if I do the lower right and put in the TLTs here, you'll see that breaking down below the 200, breaking down below that support line. I don't know if you guys can see my screen up there or not. But yeah, the other thing that higher dollar is going to do is it's going to give companies an excuse to blame their bad earnings on. And as much as I don't want to believe it, a higher dollar seems to be one of those things that gets the bears out in full force to start selling stocks, and people, the market buys it, and I think that could be a big catalyst to the downside if it starts to catch on.
Hey, Larry, retail traders might not know, but obviously oil is priced in the U.S. dollar.
Right.
What do you think that'll have an impact on, based on what Geoff's saying, to the price of oil?
Yeah, that's exactly what happens. When you have the dollar go higher, as I was mentioning. If you look here at this chart here, I'll just pull up the weekly. So it's breaking key areas, and so if this dollar moves higher, right here, let's say it gets back up to 100. That's a major headwind against global commodities. So that will pressure, crude lower. That will pressure materials lower. And that'll pressure sovereign funds that are, have all these different trades to unwind. And that can be, major significance for momentum to the downside on a lot of these different global type commodities. So definitely it hurts and not helps commodities as far as their pricing momentum. So it'd be more shift to the downside pressure. And you can see here on this dollar index here, we just broke last week. Last 2 weeks, we've been straight up. And the trend is shifted definitely back to the upside on the dollar.
So do you think that's related to the move in the bonds, right? Because it should be, and they seem to be kind of walking hand in hand, which
I think
isn't good. It supports what you're saying.
The market is seeing that the Fed's going to probably have a rate hike. So bonds are pushing. The bonds are going lower, yields going higher. Foreign exchange flocks to the highest the highest yielding currency, so that's going to be the dollar. So if the Federal Reserve does do a rate hike, we already have the strongest currency. We already have the strongest, best yielding bonds are in the U.S. versus you look at the negative yields in Europe, negative yields in Japan. So that would be more money flowing to U.S. based assets, which are dollar denominated. That pushes the dollar higher.
I couldn't agree more. It just seems like that's been the case all year long, and the dollar's just now kind of getting going, which is, from a technical point of view, it's, I say, who cares why? It's finally doing it, so you better pay attention to it now. So it's always, to me, it's always a question of it's chicken or the egg. But either way, we're both saying the same thing. You're focused on the pressure on commodities. I'm saying it's going to pressure stocks too.
Yeah, I agree. So everything will be kind of unhinged. If you get a big spike in the dollar, it's going to create a lot of volatility, put it that way.
All right. Sorry about that, guys. Again, pushing buttons all over the place here. All right, good. 2 more questions. Or actually, I think let me shelve the one that's on the report there. I'm going to use my my commanding officer's discretion here, since we have about 11 minutes left to get to some meat. Let's go top to bottom, guys. Why don't we give the listeners a trade you're looking at for the week, a trade you're looking at for the day, or a trade you're looking at out to January of 2019 now that those options came out. So we'll start with you, and then we'll wrap up after that, Vince.
Well, believe it or not, it is my focus is on the U.S. dollar. Everything that all the traders just mentioned makes perfect sense, and I think with a Fed rate hike, I believe is a given now. Whether it's going to be November, whether it's going to be December, I think it's in the cards. And if the Fed hikes rates, the dollar's going higher. And one pair I'm really focused on is the USD CAD pair. I think, as Larry mentioned, dollar goes higher. I think commodities take a hit. I think the Canadian market is focused heavily on that. And if we see a drop there, I think the Canadian dollar is going to drop. Looking at the charts whether I'm looking at the daily, the weekly, or the monthly, and especially the monthly chart of the USD CAD pair. You know, we're really looking at this chart. Back in May, there was this huge bullish engulfing pattern with nice momentum behind it. We really haven't moved up all that much, but I think we're just about there. And once it breaks loose, once we get that next rate hike, I think we're off and running. I think 145 will be the next major target for that USD CAD pair, and I think we can even get, and this is a stretch, and it's certainly not going to be very soon, but heading into the end of next year, I believe we can actually get towards that all-time high, which, believe it or not, is 1618, a nice Fibonacci number there. So I like the US dollar. I think it's going higher, and specifically against the Canadian dollar.
My God, man, I need a mute button on here. Awesome. I just like the Canadian dollar because it's the loonie. I just love that trade. All right, Fausto, what are you looking at? Day, week, month, 2 years out? What's a good trade you can throw over the fence for us?
Yeah, no problem. I just been going. There's a couple of stocks that are making some big moves. I would keep a close eye on it. I don't know if you could probably bring up the CLF. It's a little cheap little stock that we've been trading today, and it's not that much. It's a Monday, not that much going on. It's up 7%. You know, started from like 5.30. It's up to like almost like $6. OPTT has been a fun stock that we've traded back in May and July. The stock went from 3 to like 15 in about 2 days. Took a huge hit, came all the way down from 9. Is testing some major support levels. Made a little bit of pop this morning, about 13%. Nice little cheap little stock also. This is what day traders look for. So I want people to think like, oh, these are not penny stocks. These are NASDAQ national stocks. Pharmaceutical stocks have been a lot of fun lately. One thing I would stay away from, brand name stocks. Stay away from stocks on the Dow, the NASDAQ 100, you know, after seeing what's happened in this market, unless you feel confident you want to go short. But I wouldn't short at a major support. I would wait until it breaks first. You know, obviously we keep talking about being very negative on everyone being short right now, you know, where we are. One stock that, you know, I've been a fan of, I think I told you guys before, that hadn't really came down a lot. I've been a fan of Ferrari, RACE. So if you can't afford the car, at least you could buy the stock. You know, that car's that's been doing pretty well lately. I've been a fan of that one. It's testing it's getting close to some major highs. And last but not least, I've been a fan of GoDaddy. GoDaddy is at $35. It's been up, I think I told you guys last time, it was in the $32. It's more of a swing trade. It just broke all-time highs. Everyone, I think GoDaddy has almost monopoly on the web hosting, and they haven't been advertising that much, so they haven't been dumping a lot of money, but they've been doing pretty well lately. I like to see if the market does crash, if you have any stocks that you're a big fan of, that you're waiting to buy at the right price, best way to look at it. Whoever doesn't take a big hit due to a correction, that's obviously what you want to own. But if there's something, put them on your radar. But those are really, as a daily, as a day trade, you know, the CLF today and the OPTT as some swing trades. Those are pretty much it. Other than that, I would just kind of like more or less sit in cash. I really don't trust anything else that's out there when it comes to the market. And then also, what's also been doing good, I've got to mention too, not doing anything today, but I'll tell you, a lot of the gold ETFs and mining stocks have been volatile lately. Yeah. They've been a lot of fun lately. So keep an eye on those ETFs. Just make sure you can afford to trade them because they can get awfully quite volatile. But those also, I mean, you guys keep talking about the dollar and talking about oil. I'll tell you, those gold ETFs and minings, they've been rocking the big gainers and losers list on the New York Stock Exchange. So I would keep an eye on those.
Like it. Yeah, the gold ETFs have been extremely volatile and fun to trade. Geoff, what are you looking at either as a good trade for today, this week, out to the rest of your life? What do you like?
So I'm going to go a little bit longer term, but I'm sticking with the same theme I've had for today, really. And that is, if you could see my screen, top right is the SPYs. We're looking at weekly now. This is the reason why, if you look at the back down to this support, rough trend line area. If there's a head fake here, I wouldn't be a buyer of the SPYs. I actually think that's the one that's the most vulnerable right now. I would turn around and look to be a buyer of the Qs, just because as I said, my reason to be a buyer is you got to go where the money's been flowing, and the money's been flowing in the Qs. And while we may feel like it's how can you buy this stuff up here? This is as a trader, you got to hold your nose and go with the momentum. So I'd look to be a buyer of the Qs if we get the head fake in the SPYs. The other places I'd look would be, as I said earlier, SMH. Again, we're looking at a weekly chart here, but down near this 50-day moving average, or the 10-week, which is the magenta line here. And then the other, I'm going to say kind of a wild card, is I'd keep an eye on the IYT, because as you can see by this weekly chart, really had an opportunity to base here. So I think if the market does make another leg higher, and the people who don't want to be buying the Qs in the stratosphere could be looking at IYT, purely because they've demonstrated it doesn't want to go down right here. So if it doesn't want to go down, the market starts to levitate, I could see this breaking out of a base and moving higher. And lastly, from a stock point of view, obviously earnings could drive this thing in either direction, but Google seems to not want to go down either, and I can't tell you why. It's just got to feel like it could pop to the upside again. If the market goes higher, where would I look? Those are the areas I'd be looking at.
Awesome. Sounds good. Very good. Larry, how about you, my friend?
Yeah, thank you. Yeah, so we're talking about oil, and it's hard to short oil. You get kind of the sentiment going from these guys talking the market up, and creates a short covering rally, even though the fundamentals maybe don't merit the rally. So one thing we're looking at is to take a short position on oil, is to do it through what we call a front to back spread. So this chart, if you can see it, this is selling January crude oil. You can sell it futures, buying May. So it's a front to back spread. And, the fundamentals seasonally, they should usually get weaker, like I was mentioning earlier. And if we start seeing some builds on inventories, even if the Saudis and these other guys talk up the flat price, this is the contango backwardation of the market, and the contango should get steeper. So you'd see the front end go down, the back end of the market stay more stable. So this is the way to play that. So this is called a front to back crude spread. So this would be selling January crude, buying May. Currently at $1.73 per barrel. So if that goes down, if it goes all the way down here to minus 240, that's the spread difference is your profit. And it's just, you have 1,000 barrels of crude equal one contract. So, if it went from 170 down to minus 2, that's $300. That's kind of a good way that you can play it. That's short the market based on fundamentals.
Hey, Matt, did we lose you again? Oh, okay. I think we lost Matt, so see if he comes back here in a minute. Does anyone else want to have, or Vince, we want to start with you if you want to give a closing statement about your site or anything else you want to mention before the end of the show here?
Sure. First of all, David, thanks for having me back on. I really do appreciate it. But I do want to take this opportunity to let everyone know we're about to have our next annual Super Conference event in Las Vegas, Nevada, November 19th and 20th. This year it's going to be at the Four Seasons Hotel, and the focus is all on content and specifically geared towards trading into next year. We got a great lineup of speakers, some great presentations lined up. All the details are at tradingwinds.com/Vegas. Go there and check it out. You'll see our speakers, the agenda, the full bit. It should be a great event. But I really do appreciate you having me back on. I enjoyed it once again. Thanks.
Yeah, thanks for being here. It's great to have you back on. Matt, are you back yet? Okay. Okay, I guess not. Fausto, if you have a closing statement.
Sure, thank you. And yes, thanks for having me, guys, again. And once again, my name is Fausto Pugliese, president and founder of Cybertrain University. We focus, I specifically focus more on day trading, a little bit of swing trading and investing. It's what happens over the course of the day will trickle down as a swing trade or investment or into an option play. So I run a professional trading room. Not only do we teach, but we trade with our students. We got hundreds of traders in our trading room. And if you want to see what it's like to trade in pre-market, aftermarket, and see what we trade over the course of the day, feel free to send me an email, faustop@ctucorp.com, or visit our website, ctu.co.com, or Cybertrain University, and look forward to seeing you in there.
All right, thanks. And Matt, is your microphone working? Okay, still not hearing anything from Matt. So Geoff, closing statement from you?
All right. Well, first of all, thanks, David, and thanks, Matt, for having me on. This has been fun, as it always is, and informative. I learned a bunch of stuff, so I hope other people did too. I don't know if you all can see my screen or not, but if you want to learn more about what we do at MarketGauge.com, just go to MarketGauge.com and check out our blog and free tools area. We've got great commentary and analysis that comes out every day from Bysshe, every week from Keith, once a week from me, and trades and tutorials. And then some of the charts that I showed here today are also there for you to keep track of the markets. And if you're interested in learning how to trade either from a day trading perspective with rules-based system or swing trading, or how to trade using algorithmic models, that's what we're up to. So thank you.
All right, sounds good. And Larry, do you have a closing statement?
Yeah, thanks, Dave, for having me here again. Always very educational to be with these guys. And yeah, so come check out my site, powercycletrading.com. And we do have a virtual trading room as well. So we trade, futures. We'll do day trades on the various futures that are moving, but I also like to do swing trades and then use options as much as possible on those for defined risk and good leverage. And so just a lot of different things that we like to do, and still also these kind of seasonality type trades using various commodities. So come check us out, powercycletrading.com. Thanks again for having me here today, David.
Okay, great. Thank you. And I guess we completely lost Matt now. So, but just want to, for those of you who are watching, just want to remind you, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. Also, be sure to hit the subscribe button on the YouTube channel to get updates on future shows that way. Be sure to join us next week. Kurt Christensen and Dave Aquino both are going to be first-time guests on the show. Next week, that's October 24th. Also, Anka Metcalf, Glenn Thompson, and Matt will be back. And I just want to thank all my guests again for this week. Vince Vora of TradingWinds.com, Fausto Pugliese of CyberTradingUniversity.com, Geoff Bysshe of MarketGauge.com, Larry Gaines of PowerCycleTrading.com, and Matt Buckley of Top Gun Options. Thanks, guys.